Today we are going to be focusing on two accounts, owner's equity account and bank account. However, we are going to be applying the accounting equations. As we all know that the accounting equation says asset is equal to equity plus liability. Now, what type of a business are we going to be working with today? We are going to be working with a sole proprietorship. It is also been known as sole trader. What is the meaning of sole proprietorship or sole trader? It is a business that is being operated by one person. Now, that person will be liable of the debts that will occur within his or her business. Now, I made some transactions today that will help and aid us to understand how does the sole proprietorship or sole trade business operate. Now, the name of our business is American Traders, that sells wedding rings and also helping students with accommodations. Now, we have to know that under owner's equity account, we have subcategories account. The first account under this owner's equity account, T account, on our left-hand side, we have expense account. And on our right-hand side, we have an income account. Now, we have to know that under owner's equity, there is two subcategory account. And then we have to know that there is a huge discrepancy between an income account that is reflecting on our right-hand side and expense account that is reflecting on our left-hand side. Before we can start by doing the questions below here, we have to go and recall our rules according to these modules. We have to know that expense account increases on the debit side and expense account decreases on the credit side. These are the rules. And when expense account increases on the debit side, what is happening with owner's equity account? The owner's equity account decreases on the debit side. Let us come to income account. Now, income account, we all know that income account increases on the credit side and income account decreases on the debit side. Now, when income account increases on the credit side, what is happening with owner's equity account? The owner's equity account will also increase on the credit side. Let us come back to the bank account. We have to know that the bank account is an asset, but what type of an asset is our bank account? We have to know that the bank account is a current asset. What is the definition of a current asset? Remember, the current asset stands as follows. Current assets are assets that can be converted into cash in a short period of time. Let me just recall you about this accounting equation. Now, what is an asset? Asset, it is what the business owns. Asset, it is what the business owns. And then through this asset, we can generate income. How? By utilizing the assets that the business has, such as land and building, vehicles, equipment within the business. Those are examples of assets within the business. So we can utilize those assets in order for us to generate income within our business. Now, what is an equity? Equity, it is the money that the owner can claim after paying what? After paying expenses of the business and also liabilities of the business. Now, the remaining money, it is the money that the owner of the business can be able to claim. And then the remaining will be regarded as an income of the business that American traders can claim from his business. Now, remember, before we can read the questions, the name of our business is American Traders. Please remember, American Traders that sells wedding rings and also helping students with accommodations. Now, students, do not forget that our expenses account increases on the debit side, and then expenses account decreases on the credit side. When we pay for expenses within our business, when we pay for water and electricity, salary and wages, insurance, interest expense, rent expense, and stationaries, these are the expenses that the business can pay. However, when the business pay for these expenses, what happened with the expense account? Expense account will increase on the debit side. And then once the expense account increases on the debit side, it will decrease the owner's equity on the debit side. And once the expense increases on the debit side, and once the expense decreases owner's equity on the debit side, how will the owner of the business feel? The owner of the business will feel unhappy or sad. Now remember, the income account increases on the credit side and decreases on the debit side. Now, when income account increases on the credit side, the owner's equity account increases on the credit side. How does the owner of the business feel? The owner of the business feels happy because the income is coming into his business. Now, we are too near to go straight to the questions. The last explanation that I want to do right now, please recall or remember that when expenses account increases on the debit side, equity account decreases on the debit side. When income account increases on the credit side, equity account increases on the credit side. These are the illustration that I have shown you here. The first one that says when expense account increases on the debit side, equity account decreases on the debit side. Is the same thing that I've just showed here. When expenses increases on the debit side, owner's equity account decreases on the debit side. The last one, when income account increases on the debit side, equity account increases on the credit side. Is the same thing by this illustration. Income account increases on the credit side, and then owner's equity also is going to be increasing on the credit side. Now, the last explanation, the equity account in these questions that we are going to be doing, I have actually took the owner's equity account and the bank account, of which is an asset. These are the accounts that will work interchangeably. By so saying, we have to know that when the business receives money on the debit side, receive an income on the debit side of the bank account, income account will also increase on the credit side of the owner's equity account. Now, let us go and read the first question to practicalize the theory that we have just explained above. Now, please remember that we are working with the owner's equity account combined with the asset account. And bank account is an asset. It is increasing on the debit side and also decreases on the credit side. So I don't want to confuse you, student. For today, we are going to be concentrating on questions that is based on income that is going to be generated into our business, the money that will be coming into our business. And then the second video will be based on the money that will be leaving our business. For now, the questions that we are about to read, these are all questions that are related to the income that is coming into the American business. Now, the second video will be based on the payment expenses. Now, this video, it is only concentrating on income account, the money that is coming into our business. Now, the second video will be based on expense account, and then the money that will be coming out from our business. Thank you. Now, let us go and read the first question. The first question says, on the 14th of March 2022, American traders contributed 50,000 into his business bank account as a startup capital. Right. Now, I have highlighted important keywords that will help us to identify which account is being affected by these questions regarding our owner's equity account and our asset account, which is bank. Now, the first question says, on the 14th of March 2022, American traders contributed 50,000 into his business bank account as a startup capital. Now, the word bank account that we have highlighted here, this is our first account that has been affected by this question. And then the second account will be capital. Now, bank account will affect our assets, specifically bank, because the owner is contributing money into the business. We know that the capital account will affect our owner's equity account. Now, under capital, we will have a new account under capital, under income, which will be known as capital. We are going to be opening a T account of capital account. So what will happen with this 50,000 when the owner of the business contribute it into his business? The 50,000 will go straight into the American traders bank account. Which side? On the debit side, because remember the rules of this module, when the bank receive money from its owner or from the debtors or customers, we are going to be debiting our bank. Every time when the business receive money, bank will be debited. Why do we debit bank when we receive money within our business? Because the business bank account increases, goes up, become positive on the debit side. Now, what is it that we are receiving from our business? The capital amount. Now, we are going to be debiting our bank account with capital, the account that we have just highlighted here, with how much? With 50,000. Okay. Now, why are we writing capital account under bank account? Remember, the bank account, we have to narrate. A narration has to be applied. The bank account is increasing on the debit side with what? With the money, the capital. Capital, it is the money that has been contributed by the owner into his business, which is American traders. We are going to be debiting our bank account with capital account. When we debit bank account with capital account, we are explaining into our business transaction. By debiting capital account under bank, we are saying this money that is coming into our business, it is coming from the owner of the business by debiting capital account. Let me explain how does the capital account works. The capital account, it is the account that we are going to be recording goods or money contributed by the owner of the business. Now, the owner has given, has contributed, has deposited how much? 50,000 into his business bank account. The bank account will be debited, and then we are going to be opening a new T account of what? Of capital. Now, under capital, remember, this is the account of the owner. When the owner contributes money into his business, capital account will be affected. Now, this is the contra account. When we open a capital account, we all know that the capital account increases on the credit side. Now we are going to credit capital account with the bank with how much? With 50,000. Now the capital account, when we credit the capital account with bank, we are saying the capital account, it is being increased by the money that was coming from the business bank account, which is 50,000. Now let us go and read the second question. The second question says, on the 15th of March 2022, American traders sold 2 wedding rings to Mr. and Miss Hotterberg for 25,000 cash. Which two account are we going to be analyzing or narrating from these questions? We know that the word sold is the first account that will be affected by our transaction. And then the word cash is the second account that will be affected by our question. Now, please remember, when we apply double entry, students, the double entry principle says that if the first account is being debited, the second account must be credited. If the first account is being debited, the second account must be credited. That's how the double entry principle or rules work. And then, since we have highlighted the word sold, we know that we are going to be opening the T account of selling account. And then the word cash will affect our asset, but we need to be specific. The word cash affect our asset, but what type of asset is the word cash affecting? The word cash is affecting our asset, but specifically our bank account. And we have to know that the bank account is an asset, but what type of an asset is a current asset? The definition of current assets are assets that can be converted into cash in a short period of time. Now, the first account, according to the rules of accounting, the first account must be the account that must be debited. Now, the word cash affected our bank account. What is happening with our bank account? The bank account will be increasing. Which side? On the debit side. What is it that is increasing our bank account? We sold. We debit bank account with the word sales because we sold. Remember, we sold how many? 2 rings. Now we are going to be debiting our business bank account to increase with money, to increase with value. Why are we debiting our bank account? The reason is that we sold. This is a savings account. We sold. What is it that we have sold? We could have wrote 2 rings. How much does these 2 rings worth? These 2 rings worth 25,000 rand. We are done with the record of our bank account. We have debited the first account, which is bank account. Let us go and credit the last account. Now, we are going to have a new account on income account. The new account called what? Sales account. Sales. So when we open sales account, we all know that sales account increases on the credit side. So since we have debited our bank account with sales of 25,000, we are going to be crediting our sales account. We are going to credit our sales account with how much? With 25,000 reasons. The money is coming straight from our business bank account. And then we could have also written cash here on sales because this goods was being sold on cash. It means that these two people, which is Miss and Mr. Hotterberg, they came into American traders business. They bought the 2 rings on cash. On cash, it means the business has received money immediately and the customer has received their goods also immediately. Now, let us go and record the third question. The third question says, on the 16th of March 2022, American traders received 1,000 rand of interest income from Top Bank into his business bank account. What do? We need to classify first the two accounts have been affected by this question. The word interest income is the first account affected. The second word that is being affected is bank account. But remember, the rules of accounting says the first account is the account that must be debited. Now, the word bank account affected our asset, specifically our bank account. Remember, our bank account is an asset, but what type of an asset? A current asset. Now, and bank account increases on the debit side, and then when the money comes out, the bank account decreases on the credit side. In this scenario, remember, we are receiving money. From all these questions, these are the questions that I have jotted that are related to the income of the business, all of them, 4 of them. We are just recording the money that the business receives. As I said, on our next video, we will be concentrating on expense account, whereby the business will be making a payment, and an expense account will be decreasing equity, but expense account will also be increasing on the debit side. While expense will be increasing on the debit side, equity account will be decreasing on the debit side. Now let us go and record the third question. Remember, the bank account is receiving money, how much? 1,000 rand. Now there must be a reason. Bank account must be debited with what? With interest income that is coming from Top Bank. And then how much is it? The money that you are receiving of the interest income is 1,000 rand. Now, we have debited our bank account with an interest income that was worth of 1,000 rand. Let us go and also credit our income account. Now we are going to be open another account of what? Of interest income under owner's equity, specifically under income account. Interest income. Now, when we open interest income account, we all know that all our income account will increases on the credit side. The interest income account increases on the credit side and decreases on the debit side. Now, because we are receiving money, the equity account will increase on the credit side, and the interest income account also is going to be increasing on the credit side. Now, the interest income account, it is increasing with 1,000 rand. Where does this money come from? Contra account, remember, we are swapping accounts. We are swapping account. The interest income increase on the credit side with how much? 1,000 rand. Where does this 1,000 rand come from? It comes from the bank account. That's why we have bank on the credit side as a reason. These are the details. Let us go and record the last transactions. The last transaction says, on the 17th of March 2022, American traders received rent income of 1,300, cash from a tenant, David South. Remember, the business is receiving rent income. Why? Because remember, the first transaction of our business says American traders is a business that is selling wedding rings and also helping students with accommodation. Now that's why the business is receiving rent income. Why? Because it is the business that is also helping students with accommodation. Now, the first account that is being affected by this question, we will have the cash account. And then the second account will be rent income. Now, do you see that in each and every question, the question will create or invent 2 accounts. In this last question, rent income, the cash account is the first account, the second account is rent income. So the cash account, which account is being affected by the cash account? Is it owner's equity account or is it asset account? We all know that cash is money and then cash is an asset. Now this word cash affected our asset account, but we need to be specific. Which asset account? The word cash affected our bank account. Which side? On the debit side. Why on the debit side? Because when the business receives money, the money has to be debited. What is it that we are debiting on our bank account? We are debiting an rent income account, or we are debiting rent income. The money, the business is receiving the money from the tenant, of which is the rent. Income of how much? 1,300. Now we are done by recording the last transaction under our bank account, which is an asset on the debit side. Let us go and also record under our income account. We will also have a new account under income account. The name of the bank of the account will be known as a rent income. Rent income. Now, we all know that rent income is an income account. It falls under owner's equity account. Which side? On the credit side of the owner's equity account. So the rent income increases on the credit side and decreases on the debit side, because we are receiving the money from the tenant, and then it is being called as a rent income. And we all know that the rent income account increases on the credit side. So the business is receiving the money from the tenant. And then how much is the rent that is the business is receiving? The rent income of 1,300. 1,300. Now the details, the rent income, we want to know the rent income is being increased by 1,200. Where does this money come from? Contra account. It comes from the bank account. Now, that's how we are going to be recording our transaction. Please remember, subscribe into our channel. Yes, we are going to be making transactions that will be related to our expenses account. This one was only concentrating on our income account. And we have to know that the income account falls under owner's equity account. And then what is happening with the income account? The income account, the business is receiving money from the income account. And then we also have an expense account. What does the expense account do to owner's equity account? The expense account decrease the owner's equity, and then the expense account makes a contribution of payment within the business. Now, I'm going to conclude by explaining what is an expense account. Now, expense, it is the cost of the operations that a company, business, enterprise incurs to generate revenue or income. Now, under expense, we all know that it costs money to make money. We all know that under expense, it costs money to make money. Now, let me explain what is an income. Now, income, it is the revenue. Income is the revenue. Income is the revenue a business earns from selling its goods and services, or money received especially on a regular basis for a work or through investment. So as you are going to be subscribing into our channel, we are going to be focusing on other transactions that will affect our owner's equity account, but specifically expense. And then the other transactions will be affecting our asset account, specifically bank account. So the next video, it will be about our bank account that will be decreasing with value on the credit side. We will be making a payment of what? A payment of expenses account. So subscribe into our channel so that you can also be benefiting from the next video that will be related towards the expense and the bank account. I thank you. Remember that, student, in order for you to grow into this module, you need to practice, 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 and then by so doing, you will become what we call an accounting shining star. I thank you.